If you think the crash is what empties your wallet, it's not. It's the phone calls after, the rushed recorded statement, the blanket medical release, the final offer total loss number that somehow forgets your tax, your gear, and your upgrades. In the upcoming video, I'm going to rapid fire 15 insurance traps, show you why they bite, and most importantly, exactly how to beat them so you keep your money and your sanity. Save this video now, and your future self might thank you. This is insurance traps riders fall for after a crash and how to beat them. Quick note, I'm not your lawyer, state rules vary. This is practical rider intel, so you know what to ask and how to protect yourself. Cool? Then let's get into it. How this works. Each section in this video will have an insurance trap, why it bites, and how to beat it. I'll keep it tight and conversational so you can follow along easily, even if you're literally on the phone with an adjuster. We'll start with the immediate traps, or what you face first. Number 1, the recorded statement trap. The trap, the adjuster, often from the other driver's company, asks for a recorded statement immediately. It'll only take 5 minutes. Why it bites? They're not your friend. They're collecting sound bites. Casual lines like, "I'm okay," "maybe I was a little fast," or "I didn't see them," can be twisted into "no injury," "admitted fault," or "poor lookout." Guessing on speeds or distances later gets used to argue you're unreliable. How to beat it. With the other driver's insurer, you're usually not required to give a recorded statement. Say, "I'll provide a short written statement after I've reviewed the facts." Keep it basic. Who, what, where. No opinions. With your own insurer, you generally must cooperate, so be factual, brief, and calm. Example phrases: "I'm still receiving medical evaluation. I'm not comfortable estimating speed. I'll update you in writing after I review my notes." Never volunteer extra details. Think headlines only, not full documentary. Number 2, the blanket medical release trap. The trap: just sign this medical release so we can process your claim. Looks official, feels routine. Why it bites? A broad release can open your entire medical history, childhood to now. If you once sprained a wrist, they may argue your new wrist pain is pre-existing. That can shrink or delay payment. How to beat it? If a release is needed, narrow it. Limit by date, from crash date to present. By provider, only ER, urgent care, orthopedic, PT. And by body part, neck, back, right knee, whatever was actually hurt. Make it time limited, for example, 6 months. Say, "Please provide a HIPAA release limited to treatment related to this crash." Read before signing. Blank lines? Fill them or cross them out. If you're unsure, ask for the requests in writing and run them by a professional. Number 3, the no fault versus at fault confusion. The trap: you don't know whether to use PIP, personal injury protection, MedPay, medical payments, your health insurance, or the at-fault carrier first. So, care and bills stall. Why it bites? Delays in treatment look like not really hurt. Unpaid bills can go to collections. How to beat it? Learn your state's setup. In no-fault PIP states, PIP usually pays initial medical bills regardless of fault, up to your limit. In at-fault states, you can use MedPay, if you have it, or your health insurance. Then seek reimbursement from the at-fault carrier. Either way, get checked early. Keep every bill and save EOBs, explanation of benefits. Ask providers to bill the correct coverage first so you're not stuck in the middle. Number 4, the third-party push-off trap. The trap: the at-fault driver's insurer says, "Just file with your company." Why it bites? If fault is clear, pushing you to your own carrier can reduce pressure on them and slow your recovery for loss of use or diminished value, DV. How to beat it? If liability is obvious, keep the property claim with the at-fault carrier. If you need speed, you can open your collision claim with your insurer to get rolling. Then your insurer will subrogate, collect bank, from the other company. Make sure you ask for your deductible reimbursement when that happens. Use whichever path gets you moving, but don't let the at-fault side dodge responsibility. Coming up, the one sentence that can add hundreds to a total loss payout. because it forces the adjuster to reveal their math. Don't miss it. The next few traps will be the property money traps, where the dollars move. Number 5, the lowball total loss trap. The trap, your bike's declared a total. The offer somehow ignores taxes, registration fees, and uses comparable bikes that aren't comparable. Why it bites? Insurers pay actual cash value, ACV. If comps are from cheaper regions, wrong trim, salvage titles, or high miles, you get underpaid. Missing sales tax, DMV fees, that's real money. How to beat it? The promised sentence to add hundreds. Please send the full valuation report with every comparable, adjustment, condition note, and all tax title registration included in ACV. Ask for the valuation report in writing. You want each comparable's year, make, model, trim, VIN or stock number, mileage, condition notes, and every adjustment. If a comp is a salvage title or missing key options, ABS, luggage, reject it. Provide your own ads for true comparable bikes in your area. Ask, please include sales tax, title, and registration as part of ACV where applicable. If they deducted for prior damage, ask for the photos and math. This is a math fight. Show your work and make them show theirs. Number 6, the cheap parts / labor depreciation trap. The trap, they spec lower quality aftermarket parts, then try to depreciate labor like it's a used tire. Why it bites? Poor fit finish can mess with safety and resale, and labor isn't something you depreciate. It's the cost to do the job right now. How to beat it? Your benchmark is like, kind, and quality. If an aftermarket fairing doesn't match OEM fit, they should replace it or pay for proper fitment. Ask, where in my policy does it authorize depreciation on labor? If they can't point to it, don't accept it. For safety-critical parts, brakes, forks, ABS sensors, push for OEM. Ask your shop to document any part that doesn't meet OEM specs and put that in writing to the adjuster. Number 7, the steering trap, or shop choice. The trap, we only pay if you use our preferred shop, or repairs will be faster at our network shop. Why it bites? You lose control over who touches your bike and what parts they use. Some shops are great, some are less great. How to beat it? In most places, you choose your repairer. Calmly say, I'll be using the shop of my choice. Please send the appraiser there. Get emails confirming that. Your chosen shop should talk directly with the adjuster on parts and labor hours. If you feel pushed, note the date, time, and who said it. Your standard is pre-loss condition, not good enough. Number 8, the loss of use blind spot. The trap, only asking for a rental bike, and only if you physically rent one. Why it bites? You might still be owed for the time you couldn't ride, even if you didn't rent. Also, when a bike is totaled, many riders forget loss of use during the gap between crash and settlement. How to beat it? Ask for loss of use based on a reasonable daily rental value for a reasonable repair / replace time. Evidence helps. Shop estimate dates, parts backorder emails, and typical local motorcycle rental rates. Say, please include loss of use from date to date, supported by the attached repair timeline. If you did rent, save the receipt. If you didn't, you can still request a reasonable daily amount in many places. Micro scenario. Shop quotes 12 days. Parts backorder adds 9. You submit 21 days times local $65 a day, or what estimate rate is, with emails attached. Number 9, the diminished value DV oversight. The trap, bike rides fine after repairs, but its resale value took a hit, and you accept 0 for that. Why it bites? Buyers discount crash history bikes. That's money you lose when you sell or trade. How to beat it? In many states, DV is recoverable from the at-fault insurer. Gather pre-loss market value, post-repair market value, and an expert DV appraisal if possible. Submit a short package, cover note, appraisal, photos, and comps. Note, your own policy may not pay DV unless it specifically says so. This is usually a third-party claim. If your state limits DV or requires special proof, The appraisal will spell that out. Number 10, the vanishing accessories and gear trap. The trap, your upgrades and riding gear are forgotten on the estimate. Why it bites? Policies often cap custom parts and equipment, CPE, and apparel unless you buy extra coverage. If you don't list it, it doesn't exist. How to beat it? Itemize everything. Exhaust, luggage, crash bars, heated grips, quick shifter, lights, photos before and after help. Attach receipts or order confirmations. Ask the adjuster to add CPE line and to confirm your policy amount. Claim damaged gear, helmet, jacket, gloves, boots, especially if they show scuffs or impact. For the future, raise your CPE apparel limits to match what's actually on the bike you ride. Now, some traps based on dispute and coverage levers. These can be pressure valves that save time/money. Number 11, the appraisal clause you forget to use. The trap, value dispute drags on. You're tired. You almost accept a number you don't believe. Why it bites? Stalemates cost time, and riders give up money to end the headache. How to beat it? Many first-party policies include an appraisal clause for total loss valuation disputes. You pick a qualified appraiser. The insurer picks one. Those two pick a neutral umpire. The majority decision sets value. It's formal but faster than a full legal battle. Say in writing, I'm invoking the appraisal clause under my policy for valuation. You pay your appraiser, they pay theirs. If you're in a third-party claim, only against the other driver, this clause usually doesn't apply. Consider negotiating or getting help. In 20 seconds, we'll hit the coverage that protects you from hit and runs and underinsured drivers. Most riders underbuy it. Don't be that rider. Number 12, the uninsured or underinsured motorist too late trap. The trap, you learn after the crash that the at-fault driver has no insurance, or not enough, UIM. Why it bites? Without decent limits, there's not enough money to cover medical bills, time off work, or long-term injuries. How to beat it? Today, before any crash, raise UM/UIM to match your liability limits, not the state minimums. Ask your agent about stacking, if your state allows it, combining limits across multiple bikes/cars. If you're already in a claim, notify your own insurer early that you may need UM/UIM. They'll ask for proof of the other driver's limits. Cooperate quickly so timelines don't skip. Number 13, the MedPay reimbursement surprise. The trap, MedPay helps at first, then your insurer asks for money back from your settlement. Why it bites? Subrogation or reimbursement can reduce what you take home. If you don't plan for it, you'll feel blindsided. How to beat it? Before settling, ask your insurer in writing, is there a MedPay lien? What's the current amount? Do made whole or common fund rules apply in my state? Sometimes liens can be reduced, especially if you had to hire help to recover from the at-fault party. Negotiate the lien at the same time you negotiate the settlement, so your net is clear. Number 14, the track delivery exclusion gotcha. The trap, assuming your personal motorcycle policy covers track days, racing, or delivery work, food and packages. Why it bites. Many policies exclude organized racing or any use on a closed course. Commercial use, delivery/rideshare, is often excluded unless you buy a specific endorsement. How to beat it. If you love track days, look into event or track day insurance that covers on-track incidents. If you deliver, ask about commercial coverage or endorsements. Don't find out the hard way your crash isn't covered. Read the exclusions page. Yes, really. And ask your agent to explain any closed course or commercial use language. Stay with me. 2 sentences that keep you from wrecking your title and future insurance options if you keep a totaled bike. Number 15, the salvage retention surprise. The trap, you keep the totaled bike because you want to rebuild or part it out without understanding the math or the title branding. Why it bites, your payout gets reduced by the bike's salvage value, and the new salvage/rebuilt title can limit future insurance and resale value. How to beat it? If you want to retain, get the equation in writing. ACV, including sales tax and fees if applicable. minus salvage bid equals check to you. Confirm whether your state will brand the title as salvage or rebuilt, and ask your current or future insurer if they'll still offer comprehensive/collision. So, your 2 sentences: 1. Please confirm in writing actual cash value, including tax and fees, minus salvage bid equals my check. 2. Will my title be branded salvage or rebuilt? And will you insure comp/collision after? If unsure, ask for both numbers. Retain versus release before you decide. Quick recap of what to remember for the cash paper trail. Everything in writing. After calls, send a simple recap email. Per our call, you'll send X by Friday. Photos win claims. Bike, gear, helmet, upgrades, and the scene. Close-ups plus wide shots. Timeline matters. Save call logs, shop estimates, and parts backorder emails. Know your deadlines. Claim filing and statute of limitations vary by state. Put dates on your calendar. Screenshot this, you'll forget it when adrenaline fades. Finally, a few bonus smooth talking options and adjuster-ready phrases you can use. I'm happy to provide a written statement once I've reviewed my notes. Please send the valuation report and the itemized comps/adjustments. I'll be using the repair shop of my choice. Send your appraiser there. Where does the policy authorize depreciation on labor? Please cite it. Please confirm any MedPay lien and whether made whole applies. I'm invoking the appraisal clause to resolve valuation. Crashes happen. Financial fallout after doesn't have to. If you remember nothing else, keep things in writing, never sign blanket releases, claim loss of use and DV when allowed, bump UM/UIM before you need it, and don't be afraid to invoke appraisal when value feels wrong. If this helped, save it and share it with the writer in your group who thinks arguing louder beats reading the policy. And for your next watch, hit Mechanics Blacklist 12 Rider Habits That Wreck Your Bike. It'll show you how to stop killing your bike slowly, so your insurance never meets your VIN again. This is Motorcycle Vault. Ride safe, smart, and keep enjoying the open road. Catch you in the next one.